This has principally been postulated by people like Tax Research Org, Tax Justice Network, and some of the NGO organisations. And I think the thrust behind it is they're concerned about transfer pricing arrangements in developing countries, and whether countries where they have extractive industries are getting fair value for the value of their goods that are being mined or extracted in terms of the multinationals. And the theory runs along the lines of invoicing is understated between associate companies within the same group, so you invoice artificially low to the extracted country, and then you raise a much higher invoice when you get that money into a low tax jurisdiction. And the reason a little bit about this is that these folks say that we're complicit in this activity. I think they're extremely wide of the mark. I think the vast majority of multinationals prize their brand names far too greatly to enter into what is out-and-out fraud. And there are transfer pricing protocols and conventions to be operated around the world. So I think this is another symptom of the NGOs looking in the wrong place. I think it would add to auditing and accounting costs. I think you would generate a huge amount of bureaucracy for very little value. And I think their hope is that they'll try and capture more value in the developing countries so it can be taxed there and more of it stays there. In terms of helping developing countries, that's a commendable aim. But I don't think it would have that effect. And I think it's failing to address the real problems. I think Richard highlighted in his talk the $1.50 a day poverty line. If you look at the whole of Asia, China is a good example. In 1970, 40% of the Chinese population lived on less than $1.50 a day. Today, that's 1 or 2%. Why is that? Because China engaged with the rest of the world and encouraged foreign direct investment into China. And international firms had the confidence to place that foreign direct investment through Hong Kong. Why did it have to go through Hong Kong? Because Hong Kong had been a British colony for over 100 years and had the rule of law, common law, contract enforcement, reliability, expertise. And China recognized that. So when it took over Hong Kong in 1997, the number of changes it made, it amounted to zero, because they understood the value of that capital conduit. And I believe where Africa's failed, I think it's extremely sad, is it hasn't attracted foreign direct investment. The only companies that are active there to any real extent are extractive companies trying to get mineral wealth or metals and so forth, because it's a source of them, or oil. It hasn't developed out of that commodity dependency. I believe because the rest of the world has created a dependency culture for Africa, just to receive aid and to receive aid and to receive aid, not to receive real investment, because they haven't tackled the need for corporate governance, the need for the enforcement of contracts, and international firms don't trust the situation there, so they won't invest. So I think the NGOs are looking in entirely the wrong place.
I mean, as I understand it, the idea behind country-by-country reporting is that you show how much profit and how much tax you earn in each country around the world for multinational. And then the Tax Justice Network will work out the average tax rate for each country and jump up and down that some are lower than others. It might be a nice idea if you're into that sort of thing, but frankly, this comes back to the problem. When I worked in an accounting firm, I used to do transfer pricing work. How do you calculate the profit that's made in any one country? When you're buying and selling things, often the value from these items isn't absolute, but depends on where they are. Yeah? I mean, certain minerals are fairly useless when they're in their natural state. It's only when they're taken and processed and so on that they become valuable. Does that mean that all the value comes from digging them out of the ground? How much do you allocate to the processing? How much do you allocate to the marketing? How much do you allocate to the brand name of the company, which often creates a huge part of the value? These are impossible questions, and I think even if we do adopt country-by-country reporting, the answers that come out are going to be utterly useless, because you simply can't put a relative value on all these parts of what is effectively a single multinational corporate activity that happens to be spread across a number of countries.